Welcome back to another episode of Profitless on Purpose, the podcast that's all things nonprofit accounting from an accountant's perspective. Not just one accountant. I'm one of your hosts, AJ Wheeler, but with me this week, as always, Tony Cajigas.
Hello, everybody.
And Mark Pallardy.
Hey there.
Got a great show for you this week. So got 3 articles as usual and a roundtable discussion. Our first article this week is 4 pitfalls to avoid on your donation page, how you can get more donations from your donation page. We'll talk about the 4 pitfalls. Maybe if they missed one, we'll discuss it. And we have an article on how hybrid fundraising can sustain your nonprofit, especially nowadays in the era of virtual meetings, donations, fundraisers, all that good stuff. We'll talk about the benefits and maybe drawbacks to having a virtual or a hybrid kind of fundraising campaign and strategy. Then our last article is 5 reasons that donors leave that aren't your fault. So are you an organization that are losing donors or have one-timers that leave? We got 5 reasons maybe why that's happening, and it's probably not your fault. Maybe some suggestions from the panel on how you can retain those donors better. And then we have a new segment this week, a Q&A session, where we took questions from around the web and from around our audience, and we're answering them here on the podcast. We got a good one this week. We have how to structure and track restricted funds in your accounting system, what that looks like, and best practices, a deep dive into all that great stuff, riveting. And then also too, what the responsibilities for a treasurer is, what the do's, don'ts, kind of tips and tricks, what they should know, where they should sit in the that control structure in an organization, and what their responsibilities are in that position on the board. So anyway, we'll get started here. Take it away, Tony.
Hello, everybody. My article is the 4 pitfalls to avoid on your donation page. It's a short article, but it was very informative with some great tips. So basically what they were talking about is what is on your organization's donor page and ways to make it easier for the donor to participate and give. One of the things was to remove exit opportunities. And what they meant by that was that a lot of these the web pages have links to other articles, navigation bars, et cetera. They suggest to remove every link. Don't give the user an opportunity to click on something else and get off of your donation page, which makes absolute sense. The second thing they talked about was cutting down the friction. Just not having so much information out there. They suggested a few sentences explaining your organization's mission, maybe with a couple bullet points to unpack with what your gift would mean to the organization and the impact that it would have. The third item was that to add an open field. And what they meant by that was a lot of times on these donation pages, you have the option to give $25, $50, $100. They highly recommend that you do an other where you can click on that and put in your own amount. And the last thing was the forms that are actually filled out by the user when donating, make it less daunting, meaning less fields. So it's doesn't seem to be so overwhelming to the user. So it was a short article, but it was like I said, very informative. So what do you guys think?
Yeah, I think I agree with a large part of what the article is saying. I think when you get somebody on that donation page on your website, right, you want a captive audience. I really like the idea of leaving an open field, because I know I've gone to places where I want to donate something and there are those 3 options, right? And you're like, well, I was going to give more, but that's all they give me the option to do. That's all I'm going to give, right? Or I really was, if their minimum is like $100 and you're like, I wasn't in it for 100, but I was going to give them something. Maybe I'll just wait until they have something. So that idea I like. The idea of not having any exit opportunities, I get it. Once you get somebody on that donation page, you don't want them to be able to easily leave and go somewhere else. But I also feel like that seems like a little manipulative. I know if I'm going through a website and I land on a page and didn't mean to necessarily go there, the fact that I'm trapped and there aren't links to other places can sometimes make me feel like, okay, this is designed to funnel me towards give, give, give. And it feels a little disingenuous. So, and maybe for SEO, it's not the greatest either, because, the more links you have on your page, the greater you're going to be up in the search engine results. So that might be my feedback in the contrary to them. What do you think, AJ?
Well, I think, the article kind of sets forth, I think, like if, like a sales 101, or like some kind of grant making or, donation making or whatever you want to call it, kind of 101, if somebody's already said yes, you don't want to let them have a way to get out of that, don't offer them a no, often even say I've seen, like, I was in the construction business for a long time, and the salesman so many times would try to talk the person out of something they're already agreeing to, or continue talking about the benefits of something. And it's like, just shut up and take their money already, And so I really get that portion of it. I think Mark really hit on a good one. I mean, a minimum donation, like at least some other, I find it kind of annoying when, I guess we don't know where people are at. And if they're willing to donate, like 1, 2, 5, 10. I mean, then it may not sound like a lot of money, like we're talking 1, 2, 5, $10. But I mean, think about it. If you get 100 $1 donations, that's as good as, that's better than one $50 donation, that's $100. So I really think, like, encouraging any amount of giving. And I know I work with a lot of nonprofits that they would love a $5 like reoccurring gift. Which brings me to my next point is I didn't see, or I guess the article talked about it, but we didn't get into it yet. Some kind of, integration of a reoccurring gift. Let's say somebody can't give $50 right now, but they can give $5 over 10 months. I mean, that's the holy grail of donations, really, and really sales right now, is this reoccurring kind of income that you can count on, or at least kind of sketch out that is coming. So I think having that option along with no minimum or other, I think is really important around, driving as much donation that you can get. I think, online donation, especially these days, it used to be, I mean, even like 5 years ago, heck, even 3 years ago, a lot of this donation stuff was in person. The nonprofit sector had not really embraced, or not a lot of the nonprofit sector had embraced virtual payments. Even at like fundraisers, people in person, like grant, fundraisers, people would still have to write a physical check, you know what I mean, or they'd have to stick their card in like a card reader or something, like they were very slow to have like square readers and having people around to be able to do that. So I think jumping on board with this kind of like fundraising page, I think every nonprofit that has a digital presence that's fundraising needs some kind of link and integration into their website. And I think give this article a read. I think it's a good baseline to start. And I think it definitely gives some good advice, but I think some of this could be tweaked, on how, I guess to not limit your donations, or how, avoid these pitfalls. So,
yeah, and I'll just mention, since AJ mentioned that, you can always find the links to the articles down below on our YouTube, and we're also starting to post them on our @Profitless Pod website. So thanks to Ethan and our team for posting those links. And now, AJ, I think you got our next article for us.
That's right. So the next article I got is how hybrid funding can sustain nonprofits. So this was an article out of Nonprofit Hub, and it relates on how and what they're talking about on the hybrid fundraising is not just in-person fundraising events, but also online, which is a good segue from our first article here. But essentially what they're talking about is how this virtual fundraising can change how nonprofits raise money. So they talk about the type of events you can kind of have: virtual auctions, virtual dinners, virtual concerts was one that they mentioned. And then the advantages of hosting something online versus in person that they talk about was, you have a lower cost to provide this thing. Now, what they mean by that is if you're hosting like a convention or something, you need a physical space to do so in. If you're holding a virtual kind of conference, then you don't need a venue site, for instance, or a large venue to hold everybody that will be attending. You only need the site able to hold the people that are going to be presenting, I guess. A larger audience. This is one that I think really struck home during the pandemic, and I can talk about it a little bit more later, but you also have people that are mobility challenged, maybe have some kind of disability or fright of flying or being in large crowds. This allows those people to be able to interact with the nonprofit that maybe wouldn't have been able to in the past if it was just an in-person type of event. Better outreach. Again, if you're like even a local nonprofit, you can maybe able to reach outside of that locality if you have a virtual event that's marketed correctly. And then higher revenue, where, I mean, if you have more people attending, less cost, of course, you're going to have more money at the end. So there's something to think about. And then they talk about a little bit about like what they need to be, what a nonprofit needs to be successful with hybrid fundraising. So you need an online, of course, a reliable online fundraising platform. I mean, it kind of goes without saying. A tech support staff. I don't necessarily know that they're right on this one, but you do need some kind of tech support to make this all run smoothly. Social media marketing team. I don't necessarily know you need a social media team, but you need to be able to, a lot of the nonprofits we work with are small enough where you wouldn't have a team. And then some kind of online liaison. What they're talking about is if somebody's having technical issues, the presenter or the person putting on the thing doesn't need to be stopped to ask how to do it. And then, they go on essentially how you can keep these going, what your organization can do to use the hybrid. And really, the article is written kind of around a person that's kind of stumping for this pay-be kind of organization that can help you with all this stuff. But I think it was good to bring to light kind of how this new virtual world of Zoom meetings and, virtual meetings and virtual kind of areas. I mean, we're doing this podcast over Zoom, how this can be leveraged to create something. So what I'd like to ask the panel is, have you had any experiences with either clients or nonprofits that you are involved with doing a virtual event like this? Or is this something that they've considered? Or did maybe the article skip over something, or I didn't cover something that was in the article that maybe is of importance to our audience?
I thought the article was interesting, but also, like you mentioned, it was almost like a advertisement for that one company, the pay-be, whatever it was. I think virtually speaking, it's would make it easier for the users to donate and giving online, as opposed to perhaps going somewhere or have someone stop by. So, I mean, I feel like it's a win-win for both the donor and the nonprofit. Like you said, it saves on the overhead, and people can go online at their own, whenever they have time to, as opposed to being bothered maybe at home and so on and so forth. It mentioned the doing both the hybrid and both the in-person and the virtual events, which they talk about perhaps doing, when they were talking about doing it virtual, they were saving on overhead. But I feel like if you have to have two, they recommend having two separate teams, that perhaps could raise the overhead. But if your outreach is much more as far as getting in touch with people in other locations and even other countries, I'm sure that it would also raise the revenue. Mark, what do you think?
Yeah, I'm going to speak a little anecdotally to this because I'm dealing with this with a nonprofit that I currently serve as treasurer on the board. And this is a catch-22, right? COVID is the mother of all inventions, apparently. So hybrid and virtual fundraising has increased dramatically during this time when people couldn't have in-person events, and it has been life-sustaining for a lot of smaller nonprofits that weren't getting revenues or didn't have other revenue sources that were coming in. And so these virtual fundraisers and Facebook with its giving days and its incentives that they put out, along with other technology platforms, has been a real lifeline for a lot of nonprofits. However, we're at a stage anecdotally with the nonprofit I'm working with where we're trying to make decisions, right? We were going to have a big fall fundraiser this year that we were planning, and we didn't have it last year, and we had it the year before. And it is one of the fundraisers that is most successful for the organization. Well, with the Delta variant currently in the works, people are nervous. So again, we're going virtual. And while we can make money and reach more people virtually, there are certain things on a virtual platform that you don't get. The donor engagement is the virtual donor engagement, but you're not getting that in person. Let's have people present who are benefiting from the services of this nonprofit. Let's be able to tell the stories in person, have donors connect with the people they're actually helping. And then frankly, at the end of most good fundraisers I've been to, there's the old paddle raise, right? Who wants to give this one? Who wants to? And there's this competition in the room that, unless you're an eBay addict, you're kind of not getting that from a virtual fundraiser. So I think, there is a real loss of human connection when it becomes totally virtual. And I know this article is stating that you should have a hybrid approach and try to do both. But right now, when we're in a situation where people are scared to get into large groups with other people, especially those that they don't know, it's tricky. And it still feels like smaller nonprofits that are resorting to this for a second year in a row are hopefully going to just keep limping along and able to make it into a situation where they can meet in person again. But I will also mention, because we've mentioned in past weeks, going for that grant funding and things that don't rely on an in-person fundraiser can often be, the way you want to go so that you're not reliant on meeting people in person for this.
Well, I might mention when I was reading the article, and I kind of alluded to it when I presented it, but I think where this hybrid approach works the best is when you're talking about, like, I work with a nonprofit that does like an annual conference, and it's a conference that trains like-minded. They're in the healthcare industry. It trains other like-minded service providers in that area of expertise that they have, and it had always been held in person for the 7+ years it was being presented. And then last year, it was a real struggle. They had to push it back, hoping that the pandemic would pass and they would be able to just move it forward and have the same in-person kind of conference and training that done, where it worked out great. Well, it didn't work out great because COVID didn't pass, but it worked out great to hold a hybrid event like this. Was that it provided opportunities for people that were mobility limited or unable to attend in person. It also spread the reach and the budget a lot farther, where people that, like, for instance, there was one organization that's from a different state that was only able to send 2 people in all the years past, but they were able to send 10 people this time because it was virtually held, and they were able to buy that many more tickets to be able to provide that kind of level of training to everybody. It also provided a better bottom line for this organization. And essentially what they said is they were going to do hybrid from here on out. And the other part of this was the training that was involved with it was able to be served virtually, and they were able to sell that as like $100 package for people to see these individual presentations, kind of afterwards. So there was reoccurring like virtual assets that were available to them after the fact because it was held online and was able to be archived like that. But I will say, I think if you're just using a virtual hybrid fundraising kind of, or, one of these hybrid or virtual only fundraising just for fundraising, it's very difficult to try and get people engaged, like Mark said, on a one-to-one basis, or have them feeling, I think, how weird would it look to have 100 different squares on a Zoom meeting, and trying to interact with somebody on a one-to-one basis to be able to understand where they're coming from, what their needs are, and how they would, provide that. And is everybody going to sit and eat a virtual meal together on one of these like fancy dinners? That doesn't sound like fun at all. You know what I mean? Everybody's just shutting up and like shoveling food in their mouth in front of a camera. So I think if this goes much longer, I think the traditional fundraising type of event might need to be changed to kind of encompass what the new normal is if we're going to have to be doing these hybrid or virtual only type of fundraising events. And I think it's going to take some creative minds, like they mentioned, the concerts or something like that, where somebody can come and see a result of the operations and hopefully give at the end, but it's not going to be the hobnobbing, having drinks and dinner kind of gala that I think has been in the past if you're going to be doing these virtual ones. So anyway, Mark, do you have our next article for us?
You bet. My article is from Future Fundraising Now, and it's called 5 Reasons Donors Leave You That Aren't Your Fault. And, this kind of article is approaching it from coming at it as if you were a fundraiser. Oftentimes you're chasing all of your past donations and you're sending things to repeat customers, because once you've got them in the door, you want to keep those donors continually giving to your organization. So this article posits a few reasons why some of these donors just aren't coming back. And maybe the idea here is just let them go, right? And spend your time and energy on people who are more invested in your organization. So reason one is they were giving to a friend's crowdfunding campaign, right? We've all seen these. If you're active in social media, so-and-so is raising X number of dollars for their friend's birthday, right? You might not be invested in that organization at all, but you're invested in your friends, so you want to support them by giving to a cause they care about. Number two, there's an event like Giving Tuesday where you're encouraged to give a whole bunch of money because somebody else is going to match it. So you might say, all right, I have 100 to give. I'll just give 25 to each of these locations. You might not be invested in the organization, but you might just, want to be spreading your money around. Number three, a story on the news or social media caused them to find your organization. So once they found it, they decided to throw a little money your way, and allay the guilt. I don't know for some reason, but they're not necessarily invested in the continual giving. Number four, they tagged along to a fundraising event, right? When we were having these in-person events, you might be your +1 to somebody who's interested in going to some gala dinner. And so, sure, I'm here, I'll give them $50, but you don't necessarily think, I guess the bottom line to all of these is if they're not that invested in your organization, and in that number 5, which is an interesting one, they benefited in some way to giving to you, right? Maybe it was an employer incentive. If you give $100 out of your paycheck to somebody, we'll give you a gift card. Who knows? So they just randomly chose you, or let's say it was an auction of some sort and you were auctioning off some nice prize that they wanted to, contribute to, but it was more about the prize than it was about the organization. So I think the point of this is don't get too hung up on donors who may or may just be ships passing in the night, and assess that. I'll speak personally that I did this one time, gave to an organization for one of my friends because it was important to him. And man, I'm still getting the letters years later, still, and it's like, they've never even reached out and questioned why I'm not still engaged or if I'm going to be interested in the future. And frankly, I kind of resent getting paper mail. I'm on no spam mail lists and they continue to send it to me. So it's like, now you've left a bad taste in my mouth as opposed to making me potentially be interested in the future in your organization. So be mindful of that. And if you are, in the development department, just realize you're not going to get recapture of every single donor. So I'm curious what some of your thoughts are.
Yeah, I think you hit the nail on the head, Mark. I think often this happens a lot. I see this happening a lot with like larger nonprofits where you're enrolled on this donor list. They've given once and they have the firm belief that you're going to give again. And all you need to do is ask and ask and ask and ask and ask some more. So I think it's important to understand like donor retention and donor kind of intent. And what that requires is it requires more work and digging, I think, on the development department and the way that you're receiving donations. With all the wonderful tools that a development department has nowadays, I think one of the big things that they should be recognizing is how, when, and why somebody gave. And that'll give you better insight into whether or not that person's going to give again, and what the success was on the follow-up when they try to get another donation. And so I think it's very, very, very important for you to realize, and I see it happen. Mark, you mentioned, you still get mail years later. I've been in the same situation, especially when I've donated to like a larger nonprofit, where now you're just a number in the cog. And when, you're on that list, and you're going to receive a mailer for essentially the rest of your life, for the rest of the life of that nonprofit, and it's just like, I've relegated myself to put it in the recycle bin every time I see it, and it's unfortunate because it does leave a bad taste in your mouth, and it really doesn't create any kind of connection or deep connection with the organization of where your money's going. Because again, you donate and you get some card that's like, thanks for your donation, but you don't really get any follow-up on where that money went. So I think it's twofold. It's understanding the intent and why your donor is giving, and then being able to provide a follow-up on where that money went to engage them again, and so I think the engagement part of the donor, that donor kind of life cycle or life, needs to be included. And I think we've talked about it ad nauseum on this podcast before, but follow up and showing somebody what you did with their money and engaging them to donate again is going to go far much more than a postcard that asks them to donate every December, then our year-end drive or whatever it is. So I think, yeah. Anyway, Tony, I know you had something to say on this.
Yeah, I'm going to piggyback off of what AJ said. I feel that there's such a fine line between like what resources an organization should use to, solicit some donors. I know, and it also, I feel that it depends upon the size of the organization. Some of these smaller organizations, I feel like they so just want to build up that mailing list and get as many feelers out there whenever time of the year they're doing their giving, and maybe something along the lines when they send out their letter, they can put something in there where people do not want to get it in the future. Was maybe only donated one time, et cetera, et cetera. So it reduces the resources that the organization has to use to, get to these donors. So, yeah.
No, I think that's a really good point, Tony. And I have a question for you. Maybe our listeners don't know, but Tony runs a scholarship fund. So I was wondering how your donor engagement is like when you're running like essentially a fundraiser for the scholarship fund. Where do you go, I guess, or what wells do you what strategy do you put in when you're kind of hitting people up for donations on that?
Well, the organization that I'm involved in, it's very small. So we just try to build up that mailing list. And that's basically what they do. They have a couple fundraisers a year. They go to like Walmart and Kmart and ask for kind of donations. They kind of do that. But as far as getting donations, they heavily rely on that mailing list.
It's going to also echo AJ and say, I think that's a really good point, Tony, about the resources of a nonprofit, because especially with small nonprofits, you have limited capacity. I think even if you get on somebody's email list, it's easier to get off of an email list than it is a physical, envelope in the mail. And frankly, that's more expensive too, right? If you're, giving out those physical envelopes, I know a lot of the older segment of the population would prefer to get that physical envelope in the mail, but there's got to be some way to get off of those lists because it is costing the nonprofit money and they're having no engagement with that donor whatsoever, because otherwise they would be clued in that this is maybe not working successfully. They're not even looking over a period of 10 years, this donor never gave again. Maybe we should take them off the list. So, having an awareness of your donor base and realizing that this is costing you money as well, because it's not just about number of people on a mailing list. I guess maybe some grantors look for how many people are on your donor list, but it doesn't seem like it's that engaging. AJ, I think you're going to introduce a new type of breakout topic for us this week. I'm excited. Let's get to it.
Yeah, this is going to be good. So actually, we're going to do a new segment for our roundtable discussion portion of the show, and it's going to be answering questions from you, the viewer, or ones that we find online that we can kind of answer for anybody. So if you're interested in being involved in this, or you have any questions that you'd like, make sure you tweet us at Profitless Pod, or respond in the comments of the YouTube if you're watching there, and then we'll get to your question for sure. But anyway, we've got two good ones this week, and I think it'll be some lively discussions. So we'll start off with the first one, accounting for restricted funds. So this comes from a user that was wondering how to essentially organize. He's referring directly to QuickBooks, how to organize their QuickBooks like GL and tracking of restricted funds and their release, and kind of the advice that we would give any of our clients in structuring that kind of accounting system. So if anybody doesn't know, restricted funds are, essentially restrictions on donations or grants come directly from the donor or the grantor, and they are restricted by timing or purpose. And it creates some different accounting treatment than you would in like a for-profit business, but I might have gone too far. So I'd like your guys' input on essentially how you think accounting for restricted funds and their release would work in an accounting system. Doesn't have to be QuickBooks, but how we would recommend somebody do that. Or if I haven't made anything clear, please, questions abound.
Okay, I'll jump in here. QuickBooks is kind of the be all end all of nonprofit or of accounting systems in general. But as such, right, they serve many different types of organizations, but they don't master them very well. And nonprofits, if you are a nonprofit working in QuickBooks, you have probably felt the pain of this in a number of different ways, or some other nonprofit related specific software have these same issues. So to get into the nuts and bolts a little bit, if you're using QuickBooks, there's a couple different methods that you can do for restricting money, right? If you use a class system, right, you can have each different grant or each different form of revenue you're getting in be its own class, so that you can track it in and track restricted and non-restricted through the class system. But that's not what is usually that I've seen most often. Most often, the class system is still used for different projects or different segments of your organization, but the restricted monies tend to just go in the balance sheet. You're tracking that in an Excel spreadsheet off of the books, and then as you use up the money, you're effectively make a journal entry to your balance sheet every month. And then I know a lot of this is inside baseball, especially if you're not using QuickBooks, but just take a step back a little bit, right? Restricted money is restricted by the donor for a specific purpose. So let's give an example of that, right? Let's say I'm running a nonprofit for dogs, right? And so somebody gives $1,000 and they want it restricted to building a new kennel out back so that you can house more dogs for your nonprofit. So if you're running some sort of project or campaign to build this kennel and you need $500,000 to build this kennel, and so this $1,000 that comes in, you have to earmark it in some way so that it's not just used to pay the rent or pay the electricity or pay the water bill for the rest of your organization, and it probably not even to pay salaries, but it's going to be restricted in some way by the donor. So you have to make sure that that money isn't accidentally spent on other things, because let's say the kennel never gets built. You are obligated to then give all that restricted money back or ask the donors, well, we ended up never building that kennel, so do you want your money back? If you don't have the money, that is a huge problem for a nonprofit, right? Your 501c3 could be in jeopardy. There could be all sorts of issues. So tracking that is key, and you have to track it in some way. Excel is the accepted modus for most organizations. Even if they have a complex accounting system, they're often doing it in Excel as well, so that they can just look and see how much of that money has been spent, how much is left, how much do we still need to complete the project. So some more robust nonprofit specific accounting software can do this tracking for you, but that software can get quite pricey. I'm thinking like Blackbaud or some of these other, anyway, we're not going to get into the software discussion today, but I've used some that are pretty robust, but the subscriptions per year can be up in the 5-figure range, depending on the size of the organization. So I would say, look at you can do Google searches on how to track restricted funds in Excel, and you'll find a wealth of information, but that's generally, I think, best practices, especially if you're using QuickBooks.
I think a really good analogy for anybody out there that's, like for-profit accounting savvy, or it works in the for-profit realm, especially if you're on a board trying to understand what restricted funds is. Restricted funds or restricted grants work very much like unearned revenue. So you're getting paid up front for something that's going to be done in the future. I mean, for lack of a better word, we're trying to make this as simple as possible. And it's kind of a hard concept to get. And this is kind of ignoring the GAAP treatment of this, or the accounting treatment that happens on a financial statement. This is just nuts and bolts of everyday operating. So usually what I recommend is that when you receive a grant, especially a grant, like taking Mark's dog kennel, let's say you receive a $250,000 grant for that $500,000 kennel, and you need to raise the rest of the $250,000. So you receive this grant and you receive the money up front. They write you a check for $250,000. Well, when you receive that, what I would do, or what I would advise somebody to do, is book it into deferred revenue on the balance sheet, like Mark was saying. And then as it's satisfied, and then I would also have a class in your accounting system set up so you can track expenses for this dog kennel project. And then on top of that, unfortunately, you need some kind of Excel sheet outside of the accounting system that will track dog kennel projects by grant and show you how much money has come in, how much expenses you have spent on it, which would be your release of restriction for that, and then an ending balance of how much restricted cash is left afterwards. And that kind of facilitates that journal entry that Mark was talking about moving then that deferred revenue from the balance sheet onto the income statement, or statement of financial position to the statement of activities, essentially, if we're being fancy about it. But from the balance sheet to the profit and loss, essentially, is what's happening here. You're recognizing the revenue. Although this is not like pure correct GAAP accounting, what it does do is it segments everything so that it's like easy for your board, or for the grantor, or for internal staff to be able to reference how much needs to be accomplished left to go, how much of that restriction still needs to be spent or used. And it gives, the accounting department a way to track this without it muddling, with the rest of the unrestricted or released from restricted funds. So I think it's this is kind of like a deep question that this person asked. And I think it's, very down the rabbit hole of a very technical kind of accounting question. And I think often some accountants I've seen get bogged down in like the GAAP way of presenting this, because GAAP would tell you to recognize all that revenue. The minute you're granted something, that revenue goes on your statement of activities. That's correct technically, but you have to be able to track this somehow. And if your nonprofit is subject to audit and you need to present evidence of these restricted funds, I can tell you as a former auditor myself, this works very well to hand to them. It's not GAAP. You're not going to get dinged for this, but you have some kind of tracking mechanism in your spreadsheet and your deferred revenue account on the balance sheet that you're able to present them, and they can make a reclass entry to be able to recognize it correct in GAAP to put onto the financial statements. So I think my advice to anybody in this situation that may be having trouble with that is to reach out to your auditor, reach out to a trusted accountant that would know how to set this up, or do a little bit of research on, like Mark said, on how to set this up to be able to, correctly move things back and forth that are restricted and then get released from restriction.
Yeah, not to get too inside baseball, but I think another thing to keep in mind, right, is if you don't know that you're going to earn the rest of that $250,000 for the kennel, like AJ was talking about, then that $250,000 grant might not even be real revenue yet, because it only goes on your income statement, once it's actually received and is not non-refundable, right? So if you potentially have to give that money back because you didn't earn the rest, then it isn't really income, right? And you don't want to have to back out that transaction. So there's a lot to consider here. And I think AJ's advice of talking to your auditor, especially if you're starting to do projects at this level, you're likely doing an annual audit, I think is a good one. And I think, you can always ask us deeper questions here, and we'll do our best to not screw them up. AJ, I think you got another question for us.
Yeah, I got another one here. This is probably a little less heady. So this comes from a newly serving treasurer. So essentially, they're coming in to a very small nonprofit, and they've been trying. This happens a lot in nonprofits. They haven't been left a roadmap of what they're supposed to do at the treasurer role. So the nonprofit that he or she is mentioning here is only 5 years old, and they serve a certain population, and they're not sure what their focus should be as the treasurer, besides the regular operations and compliance, and showing up at every board meeting and presenting the financial statements. So what they're asking for is what they should be looking for, and what their responsibilities or what best practices is around the treasurer role on a nonprofit board. So I thought it would be good to kind of discuss what are best practices, or what would be like, I guess the gold standard of what a treasurer does or what the treasurer performs in a nonprofit. And we can talk to small, medium, and large nonprofits, because I think that role differs when we're talking about a very small nonprofit versus a medium-sized nonprofit versus a very large nonprofit. And I think the skill set in each one of those scenarios might change for what you would need as a treasurer in those roles. So I have my opinion, but I want to open it up to the floor first to see what maybe your guys' opinion are and advice is.
Yeah, I think the role of a treasurer is pretty simple. Count that money, right? Count that cash coming in, the greenbacks. That's what I'm just kidding. So it's an oversight position, right? Small, medium, or large. Generally, in a very, very small organization, especially one that's all volunteers and no paid positions yet, the treasurer is often doing a lot of the accounting work, right? They're the ones making the transactions, and they're helping to prepare the 990, if not preparing the 990 at the end of the year. If you don't meet the threshold, then of I think it's 50,000, and they might just be filing that 990N postcard. But the treasurer is often in a small organization just doing all the nuts and bolts accounting. As you start getting larger and you have enough people to justify a finance committee, and you start having enough staff to justify having accountants and then a whole accounting department, et cetera, the treasurer's role becomes definitely one of more oversight. Finance committee is generally helping to adopt the policies for the organization, right? Where they're getting together, they're determining all the ins and outs of what's going to be booked, how it's going to be booked, reserves, specific things that are going to matter to the 30,000 foot view of the organization. And then the treasurer is going to be the one who's working in conjunction with the finance department, often with the CFO, if there is one, to help, generate financials and check the work of the financials. They're going to help gauge how those financials look, right? Because you're going to have some organizations that want more graphic heavy financials, right? They want a lot of graphs and pie charts and things, and they want real visual financials. You're going to have some treasurers that are like, just the numbers, please. Just give me the high level view. I don't even want to see the detail, right? And they're going to help you look at your non-restricted, restricted money, which we've just talked about. So the treasurer really is operating at a high level, anywhere from medium to larger sized organizations. And obviously, the larger your organization gets, the more granular and more positions you have below you to do some of the legwork. And the treasurer really then just becomes, the 50,000 foot view of, yes, we're doing this, and no, we're not doing this. All, of course, in accordance with the mission, vision, values of the organization, which goes without saying for any kind of nonprofit position.
I would say my piece of advice, and kind of piggybacking off of what Mark said, is that like, if you're stepping into the treasurer role of a nonprofit, unless you have nonprofit accounting experience, I would say, even if you're a for-profit, like let's think of like what a normal treasurer would be, especially at like a small nonprofit. Usually you want to try to get an accountant in there or a CPA. Usually sometimes, if you're a very small nonprofit, that's hard to do. So you usually end up with like a banker or somebody that just, accepts the role, like whoever's willing to fill that seat, unfortunately, so if you don't have an accountant that would know or have the resources to be able to know what nonprofit accounting looks like, because that is the role of the treasurer, it's oversight of the numbers and the accounting and the money in, money out kind of thing, for lack of a better word, of the organization and the fiscal health of the organization. So if you're in the latter group, you're not a CPA or a nonprofit accountant, but you're a banker or whoever they could talk into doing the treasurer role that year, I would say, please get there's like many free kind of courses online that will give you, like the basics of what profit accounting details and the differences from normal accounting. So I would say that's a good place to start. I think if we're talking about that small to medium-sized role in a nonprofit treasurer role, I would say the other part of that is you might need to fill in as a control piece for that organization. And it may be like reviewing bank recs every month, reviewing the financials, although you should review the financial statements anyway on a regular basis, but you might need to act as that control piece with the executive director to review bank statements, checks written. You might even have to be a signer and review and write and sign the checks. I've seen that happen, where especially if you have like a 2-person organization, what happens, when the executive director needs to be reimbursed or needs their paycheck signed? Are they going to sign their own paycheck? It's something that needs to be discussed in the rules and how the control environment works at that nonprofit. So oftentimes at a very small nonprofit, a treasurer needs to act as that stopgap for oversight. And so it's super important that you're reviewing, again, money in, money out, and the control environment over that nonprofit. So I would say, have a good idea of what the controls in place are, have a look at the way that those are set up and the way that the reporting is coming to, and the underlying, documents that are used to present the board packet or the financial packet that's coming to the board. And last but not least, especially if you're in a keep it simple. Like I've seen board reports that are, or treasurers that try to report everything that's happening at a nonprofit with every GL listed. Please pare this down so people can understand it. It's your responsibility as a treasurer and on the finance committee to be able to articulate what's going on with the organization financially and provide the board with the materials that they need to be able to ask questions and, possibly serve as that control piece. So I would get very comfortable with, the lingo of nonprofit accounting and understand you might have to do some homework here. This is one position, and it's not like the secretary. You can't phone this in and just take notes. You gotta really, really dig in.
Shots fired. Right? All those secretaries out there, I want you to write directly to AJ in the comments and let him know what you think about that last comment, because I know some secretaries who work very hard. They're not going to be sending AJ flowers this Secretary's Day. I'll tell you that. So that was a pretty meaty discussion, and I think AJ brought up some great points here. But I think we've belabored this enough today. So let's call an end to another episode of the Profitless on Purpose podcast. We really appreciate you joining us. And we look forward to our next episode when the three of us can join you again. And maybe AJ can insult another entire group of people, because that's what we're about. Just kidding. Please leave us comments, questions now in the notes and down below the YouTube channel, or talk to us on @ProfitlessPod on Twitter. We really appreciate the engagement, and we look forward to seeing you next time. See you, everybody.
Thanks, everybody.